Today we are going to discuss about cost and value. In the prescribed textbook, Strategic Management Accounting, a practical guide with case studies. In this book, Lee has written this book, and there are two chapters. One chapter is relevant to cost, and the other chapter is relevant to value. But both the chapters, the contents in both the chapters would be discussed today under cost and value. So it would be co-lecturing myself and Mr. Sohan Patrick. The learning outcomes. When we speak about costs, there would be traditional cost analysis and strategic cost analysis. Therefore, today we will discuss about traditional cost analysis, which have two main ways of analyzing costs, functional and based on cost behavior. And thereafter, we will discuss about strategic cost analysis. Value. We will be discussing about the value chain analysis from two perspectives. Internal activities, that is within the firm, and beyond the firm. When we speak about beyond the firm, actually it would be the upstream, that would be the supplier's value chain, and the downstream, which would be the customer's value chain. The supplier's value chain, the firm's value chain, and the customer's value chain should be synchronized, where it would be the value system. This in turn will help the firm to generate value to the customer and thereby generate revenue and profits. With respect to this lecture, I told you that Mr. Sohan Patrick will engage in co-lecturing with me. He's the General Manager, Strategic Planning at MS Holdings Private Limited. He is a visionary business leader. Actually, he's a star for his age to come up to this position. And he is a CIMA as well as an ACCA qualified professional, accounting professional. And also he has a master's degree. And actually, I'm sure he will be able to inspire you when he speaks to you. Traditional cost analysis. Now, I said we are speaking about traditional cost analysis and strategic cost analysis with respect to costs. Firstly, traditional cost analysis. There are two approaches, the functional usage and cost behavior. Now, with respect to functional usage, the costs incurred with respect to a function is being considered, and it does not consider the costs based on the activity or output. Because of this drawback, there is another method of analyzing costs, which is also a traditional cost analysis method, which is based on the cost behavior. There, the cost incurred is considered reflecting the output, which is the production level and or the sales level, and thereby what is the relationship between the output and the cost? Where is it variable or fixed is considered. But here again, there is a drawback. There is overemphasis on the output dimension, volume dimension, and there is no emphasis on the strategic perspective. In sum, based on the traditional cost analysis, the functional costs are considered based on the functional usage, and based on the cost behavior, the cost incurred with respect to the output is considered, and whether it varies or is fixed with the output is considered. However, these costs incurred, is it really necessary for these costs to be incurred in order to be competitive in the marketplace? Is not considered. Actually, that is important in an organization. Organizations are not charitable organizations. They want to generate profits. For that, they have to be competitive. Then, based on their competitive strategies, that they have to incur the costs. But such areas have not been given the importance it warrants based on the traditional cost analysis methods. This is a case study, a real life case study, because I witnessed this. In a ceramic products manufacturing company, actually it is Midaya Ceramics, what happens is that the customer will give a particular product, the customer will bring in the product, or it would be a product which has been already manufactured previous years, some years back, and that will be ordered. So based on the order that has been placed, what happens would be that now in this company, there are various sections. Here you could see sample section, casting section, clay preparation section, finishing section, firing section, polishing section, painting and spraying section, glazing section, checking section, completing section, and also the packing section. So many sections are there. Sections, in other words, what is the synonym that we could use would be functions. With respect to these functions, there are, in every function, there are activities that are being carried out. Now, for each activity, costs are incurred, and function incurs, there are activities carried out within the function where costs are generated when these activities are being carried out. So what happens in activity-based costing? In activity-based costing, there would be cost drivers for each and every activity, and there would be the cost pools for each and every activity, and the costs are being absorbed, attributed to the output. That is how it will happen based on the cost drivers that have been used by each unit of product. Now, in this company, actually, what happened? Now we see there is actually a need to implement activity-based costing because there are functions, activities, costs have to be brought in, charged from the customer. Activity-based costing can be implemented. But actually, what did the company do? This is what the company did. All orders completed during a month reflected a profit in the post-costing prepared for each order. How did they prepare this post-costing? Now, there was a pre-costing prepared when an order was accepted. Oh, this is the product. I told you the customer will exactly tell you what is the product that he or she will require and the order quantity. Based on that, there are so many sections and the sections will say, oh, we need this number of labor hours to complete this order. And then the company had a predetermined labor rate where they say, okay, for the labor, they had a budgeted labor cost for a month and the budgeted labor hours, and they knew what is the cost for a particular labor hour. So now they have the labor hours that may go in for the order and they can arrive at the labor cost. And they can determine. So you know that labor cost, normally labor cost is a direct cost. Now direct material, that can be determined easily and there would be direct expenses. And what happens about the overheads? Indirect material, indirect labor, indirect expenses. What they did was, they considered administration, selling and distribution, financing, all these costs as overhead costs. And they knew for a month how much costs had to be incurred. And that also based on the labor hours that they determine an overhead absorption rate. Based on that they prepared the pre-costing. When it came to the post-costing, they said this this is the labor cost that we were going to use. This is the budgeted labor hour, hourly cost, and they use the budgeted labor hours. They didn't actually calculate actual labor hours. So it was a budgeted labor cost that they brought into the post-costing. And they considered, however, from the records, they were able to find out the actual direct material cost and direct expenses. However, again, the overhead costs also what went to the pre-costing, which was an arbitrarily, it was arbitrarily apportioned. Okay, normally for a month, this is the overhead cost. Normally, this is the labor hours. So they had the predetermined overhead rate, and based on the labor hours, they apportioned it to the order. Now you see that this is like Paul Mallow. We are speaking about traditional costing. They are trying to get the costs incurred with respect to each and every section. And then again, they are thinking about the cost behavior, but actually, they are not getting it right. Something is missing because they are actually not finding out what is the cost incurred for the function. They are not finding out from those functions what were the costs incurred for the activities. Then they are not determining a cost driver, and they are not determining what is the usage of that particular cost driver for the order. There are so many drawbacks in this costing process. Now, what happened was that, as I have stated here, the post-costing prepared reflected a profit in the way that they were doing it. But when they prepared the profit and loss account for the month, there seemed to be a disparity between the post-costing prepared for each completed order during the month and the profit and loss account for the month. Why is it? In the post-costing, the direct labor cost and overhead costs were arbitrarily apportioned. I said what went to the pre-costing was brought in here too. And however, the monthly profit and loss account was prepared using the actual financial information obtained from the trial balance prepared for the month, which gave true and accurate results. However, now අපි කියන්නේ කෝච්චිය ගිහිල්ලා කියලා ඇත්තටම එවැනි දෙයක් තමයි මෙතන සිදු වෙලා තියෙන්නේ. The customers have been already charged. Their orders have been completed. We don't have contacts with those customers again. But we have charged them a lesser amount than the actual cost that was incurred. Now the company is incurring losses. And if the company continues to incur losses for each and every order that is being completed, the company would finally go into bankruptcy. On the other hand, if the company charged higher costs, they wouldn't have been competitive and they would have lost in the marketplace, and that also would have reflected badly on the company. Now, what happened in this company? They did not have an accounting information system within the factory. No information at all. Only the trial balance that they are preparing manually by an accountant who was partly qualified. And what happened was that the owner of the company didn't invest anything on technology, and neither the workers were technologically savvy. They were illiterate. Even manually, they were not able to collect data. And also, the owner did not want to employ any worker to collect data, even manually, because he thought that it was a waste of time. He didn't understand how important it was to determine the actual cost for the orders completed and charge it from the customers in order to be a profitable venture. Now, what happens is that consultants, three consultants from, actually two consultants from a consulting company, and I was told to join them. So three people now altogether, including myself. We were working on this, and the other two were really, they were quite dominant in the group, and they said, oh, the solution is activity-based costing. And the company did not do anything to implement activity-based costing, but company paid the consultancy fee to the company that was given this consultancy assignment. Nothing materialized, and that is the actual story. This is an actual story. Now you see that it is important to see the competitive position of the company, and the company will have its own strengths, weaknesses internally, and externally there will be opportunities and threats. And based on this SWOT analysis, the company should consider, oh, are we going to opt for the cost leadership strategy, or are we going to opt for the differentiation strategy? You know that a company does not operate in a vacuum. Therefore, it is always important to do a comparative analysis and opt for a competitive strategy, implement the strategies, and evaluate. It's very important that you evaluate what you implement because it will require revising your plan if your intended goals and objectives within the company that you have formulated have not been attained. Because the company has to be a profit generating venture. And for this, determining the competitive strategy is of paramount importance. Now, you see here, actually, Lee has presented this diagram in the prescribed text. How effective the cost structure is built around the strategic choice. Now you can choose between cost leadership and differentiation. Don't be stuck in the middle, Potter says. Then it is important that you do a comparative analysis about your product attributes. Is there differentiation in that based on the product attributes? Or the costs that are being incurred on the product? Can we adopt a cost leadership strategy when compared with our competitor? Such things should be carried out after in the process of identifying your SWOT and determining your competitive strategy. And based on your competitive strategy, you will thereafter, the strategies you will determine, oh, we will have in our value chain, we will have these activities as these are value adding to the customer and the costs incurred should be minimized, or to provide the attributes which brings in differentiation, such costs should be incurred. So you have to make decisions and formulate your strategies and implement it. So if it is a differentiated product, the strategy would be branding and pricing, and such things should be considered. In the cost leadership, it will be important to ensure that you provide the highest value for the minimum cost. And such strategies will be implemented, and you evaluate your strategies. You know, always there would be key performance indicators to understand whether the strategy is a success or a failure. You can benchmark with your competitors. You can see what your budgets were, whether the budgetary milestones were attained or not, and evaluate and rectify if anything is required to be rectified. Now I spoke to you about costs, traditional cost analysis based on function and cost behavior. Then I spoke to you about strategic cost analysis, that is determining the competitive strategy based on your comparing with your competitors, that is whether a cost leadership or a differentiation, and you should not be stuck in the middle. Now, I'm discussing with you about creating value for the customer. Creating value for the customer. At Actually, it can be horizontal, that is within the firm, analyzing the activities and ensuring that the activities generate value for the customers, and non-value adding activities are eliminated or minimized. Michael Porter is the person who has highlighted about horizontal value chain. But Shank and Govindarajan speaks about the vertical value chain that is beyond the firm. I spoke to you about the value added upstream and downstream. That is, with respect to the supplier's value chain, you need to have controls with respect to the standards. You have to set standards and have cost controls, quality controls, input controls. All these things should be there. And within the firm also, you have to do the value chain activity, value chain analysis. And customers, sometimes your end user will not be your customer. For example, there could be dealers. In such instances, you have to get the required information. You must have customer intimacy and get market information and ensure that your firm is generating value to your end users. So upstream and downstream, the firm's value chain, supplier's value chain, customer's value chain be synchronized will form the value system, and you need to generate value to your customers. Now, with respect to this, you see that when you analyze the value chain in any firm, the firm that you're operating in, there would be value added activities and non-value added activities. The value added activities, if it is non-core, you can outsource. Value added activities, if it is core, you have to maintain and improve. The non-value added activities, if it is non-core, eliminate. If it is core, minimize. Now, here I want to speak something about the context that is prevailing. It is important to understand the context. You operate within a social system which has a particular culture, which the social system is reproduced by the culture. Now, we speak about the new normal. There is in this particular social system that is operating after the with the COVID-19 pandemic, in this social system, there is a new culture that is prevailing, working from home and everything, inhibited social interactions. Therefore, people try to do everything using technology. And in such instances, now, Lee would have written this book some years back before we knew anything about COVID-19. So therefore, IT services at that juncture would have been value adding, but non-core activities therefore outsourced. But in the present era, in the present context, it is important that such IT related services could be the core activities that are being carried out within the company, because technology plays a pivotal role. And also, I said, there would be various techniques that you would bring into the company. You would have studied these techniques now in your professional accounting examinations, when you're studying for those, then in your training organizations, then from the internet, what you learn, by reading books that you learn, by attending conferences, what you learn. So many ways you learn various techniques. But when you bring in, now you saw in the Midaya Ceramic Company example that I gave you, there it's a, we actually can't understand what is the cost, uh, what is the cost analysis system that they are using. So actually, there also we see that the consultants were not able to bring in a solution which would fulfill the needs of the company, because they didn't know, they didn't understand, they were not bothered to understand the prevailing context. So therefore, please ensure that anything that you do, keep in mind there is a social system that is prevailing, and based on that social system there is a culture that operates, which would be reproducing the social system. And to accommodate the cultural values, you have to adapt accordingly. So, not merely adopting, but adapting. Don't mimic other organizations. Some organizations, some activities would be value adding, some activities would be non value adding. But that will not be the case to your organization, because the industry you're operating in would be different. The nature of professionals who are working would be different. The number of years the company that has been operating would be different. So, finally, in my discussion, what I want to give you is that it is important to understand the context. And in that context of the present day era, we see that the COVID-19 pandemic. Now, MS Holdings, a story of resilience to the COVID-19 pandemic. Now, in this particular context, MS Holdings has been able to strategically identify their costs and generate value to their customers. And in that particular process, always there will be constraints, issues that have to be addressed, continuous improvement without being uh, without being happy with the existing status quo, continuous improvement. So that story, based on that particular context, what happened then about the cost and value being managed, ensuring that the goals and objectives of the firm was attained. The firm is MS Holdings. The case is MS Holdings. And therefore, the cost and the value, managing that in this particular context, taking a strategic approach, will be discussed now by Mr. Sohan Patrick. Now I shall stop the recording and again start the recording, because we can have the recording uploaded only for 1 hour. So therefore, I will stop the recording and start again, and then I will hand you over to Mr. Sohan Patrick. Thank you very much.
Hi, good